Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, and we're now at the 2nd of May, 2019, about 3:15 p.m. Central Daylight Time. I'm doing this right now because these will be the settlement prices in all the stock indices, even though the market will reopen at 3:30 and go to 4 o'clock. You're still going to settle right where you're at now. You can see the gold market continued to get hit. Silver down too, but gold down more than silver as the ratio comes somewhat back in line. Look at how the copper market doesn't budge. Got new problems with Mexico saying it's time for the U.S. to take the tariffs off on its steel and tomatoes. There'll be talks about this soon. They've done what was asked of them by House Speaker Pelosi in labor reform. It's on the president's desk. It's been passed by their Senate. He won't sign the deal unless I think he's assured that the U.S. is going to live up to its side of the bargain. Will Nancy Pelosi want to give a deal, a good deal, to the president? That's the big question. So as I take a look at the S&P, we're down for the week right now about 23.5 points. The high we've recently been on a closing basis is 2941.50, and we've backed off about 23 points from there. As you can see on the daily bar chart, you had an outside day down yesterday and you made a lower low today. So you still haven't put in jeopardy yesterday's high. If you did that tomorrow, I'd still call that a trap for who? For the bears. Unless that happens, the market acts as though it could be breaking down. And where do you think it might go to? Well, the first thing we look at is the swing line, and we see that we've broken a pattern. If I take out yesterday's highs even, you've still had the pattern of higher lows, higher highs. Then we had that big reversal yesterday, which broke through this arrow, the blue arrow pointing up, and now you're following through. So you're not in a pattern. You have a higher high and lower low. That is not a trend pattern. It's a pattern, obviously, but not a trending pattern. You know what I think about the 18-day average of closes? You've heard me say it before. It's where the markets often go to figure out what they're going to do next. So it took a while. It took the whole month of April. You never hit it, but you finally have pulled back to it, admittedly at a much higher level than you started out the month with, but that's what bull markets are made out of. They climb those walls of worry, and on the pullbacks, the question is, do you get sharp ones or not? When looking at the market, what I think is developing is sideways action within the Bollinger Bands. The pattern was gradual up, and now it seems to be more turning sideways, which is indicative of a churn in the market. Should the market decide to rally, the resistance at the upper Bollinger Bands, 29.53, with the lower band offering support around the 28.79 level. Now, those numbers will move a little when the market reopens tonight, but they're giving me an idea that, from what I've seen as a chartist, that that's what the market might be up to. In terms of momentum, when you lost the embedded reading, this is how it looks when it is embedded. It hadn't gone to that 18-day average. As soon as it lost it, it went right there and it stuck against it. That's classic, what I call ending the trend and trying to wait for a market to figure out what next. If we come back and we look at the slow stochastics that were embedded also in the NASDAQ, if they're lost, I look for prices to get back to the 18-day average. Made a run at it yesterday, and today it did just what I was hoping it would do. It doesn't mean I knew it would do that, but it went right to the 18-day average, and it's like the brake was put on the marketplace. It said, okay, I got to figure out what I'm doing. Now, the settlement today is going to be at 77.36.5, which is still over the 18-day average. So even though the market's got the momentum now pointing down and it's overbought, in order to come out of those embedded readings, you typically get overbought. You can lose that overbought status like that with any further of a drop in the market. And then the question is, do you close under that 18-day average or not to give the bias down? I think it's going to be an important day tomorrow. In the Dow, you got under the 18-day average yesterday. Now, if we take a look at today's low, it's 26,148. It did not get to the 26, the lower Bollinger Band. It missed it so far by about 30 points. Momentum pointing down, the bias down. You're not in a trend. You've got a higher high, lower low. I'll stick with what I said about the S&P. I'm questioning if we're not just going to stay in this band for a little bit as the market tries to figure out what next. In the Russell, I'm going to stick with the same idea. The market's got a pattern where it came through here. If you look today, this low was 1566.90. If we come back right here, that low is 1565.70. So you still have, and that's why I'm showing you that, it did not break through that. Do you disagree that we're going sideways at this point? From sideways action will come a new trend. Either it's a resumption of the one where we go back up, or it's going to do something that won't to the downside. The longer it stays sideways, the better and larger the eventual move becomes. In the VIX closed today at 1442. The upper Bollinger Band is 1459. I think the pros, either yesterday after the FOMC meeting or they waited for today, I think they came in and wrote, and you know what I'm going to say, wrote calls looking for the move back to the 18-day average. And the reason I keep saying that is it's a phenomena that I'm seeing. It's not a trade recommendation to you. It is something that I'm seeing. Can you get wrong on that? Of course. Take a look right here. The market roared to the upside. Did you have the guts to sit and ride it out as it then eventually came back? Well, I'll leave that up to you. My job here is to point out what the chart's looking like, not telling you in these videos, do this, do that. When we come to the bonds, take a look at yesterday. You got up, made your run at the 18-day average. I said you missed it by one tick. If it couldn't follow through, I'd be looking for the 18-day average. That's right where you went in the market again. Starting to go like you're seeing in the stock indices. Look at the overall pattern here. We're starting within these bands to go very much sideways. It's sort of like a market that's lost its momentum, trying to figure out what next. However, when you just look at it, throw the name off it, you've still got higher lows, higher highs. The settlement looks like it's going to be right at or slightly under the 18-day average. If it settled just like this, remember, this market still is going to determine where it's at. I think it's neutral. I say because I'm guessing the settlement will be under the 18-day average. The swing line is up. The two fight each other, and momentum has gone flat on you. In the 10-year notes, let's look at the first challenge. If you hit an upper Bollinger Band or a lower, you know what, I believe in that. I think that's where professional money often comes out. Could the market run further? Of course it could. But, you know, you play what the percentages are. I don't know that you're trading one contract, 5 contracts. I don't have any idea. But when I'm looking at it, one of the things that I teach is the first challenge of a Bollinger Band often gets thrown back. Now, if the market's going to try to support itself and keep a trend, the key is going to be the 18-day average, and if it gets under 123.10, it loses the bullishness, and that's what happened today. You got to 123.05, so now you've got a pattern of a higher high, lower low. I want you to focus in on the black lines. They seem to be going sideways. The bias is down because you closed under the 18-day average, and momentum down. If the market decides to break, possibly these will be the numbers that it goes to. Otherwise, I would not be surprised to just keep fighting at the 18-day average of closes. In TLT, this was yesterday's action. The market missed hitting the upper Bollinger Band by 6 ticks, 6 cents. If it falls back, the 18-day average is likely an area that it goes to. It did not get through 122.85, so the trend is still up. The bias is up because you're going to settlement, and this is in, over the 18-day average. The key is not to take out 122.85, but you've got a little divergence. You're starting to make momentum point down here. In the dollar index, we fell enough yesterday to take out a previous low, and the market didn't even come back and try to challenge that 18-day average again. This is a market out of a, I'm going to call it out of a trend as defined by higher highs, higher lows. You've got the lower low, higher high. However, it still has upside bias as it's refusing to close under that 18-day average. And instead of momentum pointing down like it was doing yesterday, it just flattened out right here. Interesting. So if interest rates in the futures go down, maybe that offers some support to this market. In the eurocurrency, you're still very much in the downtrend. Lower highs, lower lows. The market has rallied enough where it's no longer an oversold condition, but if it drops any further, it can be in one like that. I'm looking to see if it does that, does it get to the Bollinger Band? And I'm also looking to see, assuming you don't get down into these numbers, what happens if you get over 113.11? You could turn the pattern higher lows, higher highs. So where do I think the bears defend the market? Right here at the 18-day average of closes. We'll see if that happens. The Bank of England had its monetary policy meeting today. They voted 9-0 to leave interest rates unchanged. From reading, as I did, parts of the statement, it looks like they're not even talking about raising rates anytime soon. However, afterwards, when questioned, Mark Carney, the senior governor, of course, of the bank, said he thinks that interest rates are going to be going up, and it's not going to be a rate hike. There's going to be a number of them needed. Obviously, right now, they're in that quiet period in front of Brexit, and they're looking at how the economy's doing. But from everything I'm reading, he thinks the economy's in good shape, and it's going to have to be watching inflation. He thinks the market's got it wrong, especially on oil prices, leading to lower inflation there. Read his statement. It's interesting. Lower low, higher high, comes back to the 18 and the 100-day average, looking to see what it's going to do. It's not trending. Japanese yen, we've got the big holiday. It comes to an end this weekend, so the Japanese markets reopen. For the past 6 days or so, market's just been hanging at this 18-day average, that line in the sand, as I like to call it, in sideways action. No trend. Well, that's not true. It is trending. You've got the higher lows. You've got the higher highs. The market's finished over today the 18-day average of closes. I believe it did. 89.85. And that 18-day average is basically right there. So everything's just hanging with each other right where it has to. And the close was 89.98.5. Did I say 85? So it's over that. It still has a bullish bias to it. I'm a little disappointed, and I think the bulls were that you couldn't get to that upper Bollinger Band, but they control the market unless you cut down under 89.55. Bitcoin, this has been a nice bounce off that low, but you haven't gone up high enough to say, hey, I'm negating the downtrend by getting over this last high here. Also, what are you doing? You keep hitting the 18-day average. You're just hanging here in a sideways action. In the crude oil market, now, I've got the wrong one here because June's off the board, so I'm going to fix that chart tomorrow. I won't discuss that. Now we've got the July Brent. I'll fix that chart right after this. Lower highs, lower lows. Bearish. Support the lower Bollinger Band, and you're entering a period when you reopen tonight, you're probably going to be in oversold territory. So somewhere between here and that Bollinger Band, I will not be surprised to see people reach and take some money off the table if they had gone short this market, which it's in a downtrend. In the WTI crude, you closed the first time under the Bollinger Band. Now, we'll see if it has any legs to it. So far, the close is over. It had been met by it being thrown back, but it didn't change the overall trend at that point, which had upside bias. You haven't had downside bias in this market since March, and it lasted a very short period of time. You already have more days in a row under that 18-day average than you did back in that March time frame. So this market has changed a bit of its character. I think it's saying there's plenty of U.S. crude around, and it's respecting that. Gasoline, lower highs, lower lows, the very first close under the 18-day average. So the trend is down, the bias is down. Potentially, the lower Bollinger Band might be hit. Resistance back at the 228 level, and you don't want to see the highs right through here of 204.47 taken out. That would break this bear pattern. Natural gas. I think you're running into the brick wall at the 18-day average of closes as we talked. When you lost the embedded reading, that was the goal, and that's where the market went. I talk this and so much more in my daily research that if you haven't seen it, I'd love to put it in your hands. Twice a day, I wrote market report. I even put out oral updates, typically once, twice a day as well. I start you off, if you haven't tried my research, with a morning subscriber video. In that video, I cover about 45 charts. I give you ideas using slow stochastics, window envelopes, moving averages, and swing lines. So I'm going to use those in here, and then I write about what I'm seeing, so you get a real viewpoint of it. The way that I write, I want to be not pages long. My newsletter is short. I cover the points. I tell you ahead of time what the market's expecting in reports tomorrow, what the analysts are expecting out of those reports, and anything that I think is important for the next day or the next session trading. How do you get access to it if you haven't tried it? Well, you can always call us. You can go to our website and sign up for it. Just go there and you'll see a carousel of free offers. Click on it or click right up here. It'll take you there. I'm Ira Epstein. You have a good day. Talk to you tomorrow.